You've probably been hearing everyone in the media talking about how ChatGPT and generative AI are going to eventually disrupt entire businesses and the whole economy at large. But what if I told you that all of that is already happening right now at this very moment? The reality is that ChatGPT just claimed its first unsuspecting victim in the form of the company Chegg. For those that aren't familiar with Chegg, it's an online education company that sells education services to students. Chegg is also a publicly traded company on the stock market, so they are legally required to update their investors on how the business is doing and things that are materially impacting the business. They recently reported their quarterly earnings, and things did not go well for the company to say the least. Chegg's stock price crashed over 45% in just a single trading session after it reported its earnings for the first quarter and warned its investors that ChatGPT was hurting its business. The meltdown was triggered by Chegg's CEO acknowledging that there was increasing competition coming from ChatGPT and generative AI. Chegg said that during the first part of the year, they weren't noticing any impact from ChatGPT on their new account growth, and they had been meeting their expectation on new member signups. But starting in March, they began to notice a significant spike in student interest in ChatGPT, and the company admitted to its investors that it believes that this is having a negative impact on their new customer growth rate. Chegg then proceeded to completely remove its full-year revenue guidance due to the uncertainty created by ChatGPT, which started the stock's immediate downfall. Analysts on Wall Street are downgrading their ratings for the company's stock and have been saying that the existential threat from AI stole the show and totally overshadowed everything else in Chegg's earnings. And the reality is that the collapse of Chegg's stock reflects the fact that investors have very serious concerns about the potential for AI to ruin the businesses of even some of the largest corporations out there. The reason Chegg lost almost half of its valuation in one day shows that investors think Chegg is seriously at risk of losing to AI, and it's something that people are rightfully worried about. In the case of Chegg in particular, it's not like this is entirely out of left field either. Education is a space that was among the first groups to sound the alarm about ChatGPT and generative AI. Ever since ChatGPT's release back in November, schools and teachers have been scrambling to figure out how to prevent students from submitting assignments that were completed by ChatGPT. Many schools have banned ChatGPT and generative AI due to concerns that it's destructive to the learning process, as well as the fear that it can spread misinformation and plagiarism. Meanwhile, on the other side of the spectrum, you also have some teachers that have completely thrown in the towel and instead have been teaching their students how to work with generative AI as part of their school assignments. The point is that while there's been a wide variety of approaches that schools have taken with ChatGPT, everyone has had to address it as the elephant in the room. I would argue that education has been one of the areas of society that's been most impacted and disrupted by AI so far. So it's no surprise that Chegg is feeling the pain from ChatGPT's release, since they are an education company. For those that aren't familiar with what Chegg actually does, its entire business model is built around offering a wide variety of services for students. Chegg was originally founded back in 2005 and initially started as a textbook rental business. But over time, Chegg has massively expanded its offerings beyond textbooks to include many other educational resources and services. The segment of its business that is being hurt by ChatGPT the most is its Chegg Study subscription service. Chegg Study is a subscription which provides students with access to a variety of educational resources and tools, like homework assistance, help from subject experts, and study resources. Students are able to post homework problems to Chegg's website and get assistance with helping to solve them and an explanation of the answer. But many students aren't seeing a need for Chegg's Study subscription when they can get similar help from ChatGPT instantly for free. After all, it's just as simple as typing a question into ChatGPT and getting an answer just seconds later. And Chegg knows that this is what they are up against at the moment, so the company has been scrambling to try and address the AI threat quickly. In the company's earnings call, they told their investors that they have been, quote, aggressively shifting resources and focus towards fully embracing AI, end quote. Chegg's CEO in the earnings call even talked about how he had met with Sam Altman, the CEO of OpenAI, to discuss how Chegg could move forward with integrating AI into its education services. As part of this collaboration with OpenAI, Chegg has been working on building an AI service of its own called Checkmate. Checkmate is a tool that combines Chegg's content library and data with OpenAI's GPT architecture, and the company is currently beta testing the service right now. Because Chegg is using OpenAI's GPT-4 architecture to build Checkmate, Chegg is really building their service on the same fundamental architecture that ChatGPT runs on. So it's not really clear whether the additional data inputs coming from Chegg's library of content will be enough to differentiate Checkmate from ChatGPT in a meaningful way in the minds of students. And this is really important for the company because students can access ChatGPT for free right now. Students having to pay for Checkmate is a really steep sell when the alternative in ChatGPT is completely free. So it doesn't seem super likely to me that this new AI initiative will be enough to tip the scales back in Chegg's favor. To make matters even worse for the company, Chegg is already well behind the competition at this point and trying to play catch-up, since Checkmate is just in beta right now, and ChatGPT is already out in the wild for anyone to use. This also seems to be the current view by many financial analysts right now, with many of them saying that they fear Chegg will have already lost too much market share by the time Checkmate is actually ready to roll out to the public. Analysts are also skeptical that there will be any impact for the company's revenues this year at all from Checkmate. It might just be a case of too little, too late. Chegg's downfall serves as a reminder of the grim reality that's confronting numerous businesses facing the arrival of generative AI. The disruptive capabilities of this technology are becoming increasingly apparent with every day, posing challenges to established industries across the board and the economy at large. There's been almost nonstop talk about the possibility of jobs and businesses being impacted by AI, but the reality is that it's already happening right now, much quicker than people think, and the effects on the economy and labor market will be far-reaching. Because of these massive impacts on society, it's my personal opinion that AI development should be more tightly regulated because of these risks associated with the technology. As ChatGPT and other generative AI models continue to advance even more, businesses must confront the pressing need to adapt, innovate, and redefine their strategies to stay ahead. The case of Chegg serves as a warning to other businesses, highlighting how they need to quickly assess and respond to artificial intelligence. After all, failing to adapt could put entire companies at risk of failing. But be sure to let me know your thoughts on Chegg's situation and the impact of ChatGPT in the comments below. And be sure to support the channel and subscribe for more finance content. Thanks.